Good morning, traders and investors. It's Wednesday pre-market, and we're waking up to a lot of emotion surrounding Opendoor Stock, ticker symbol OPEN, after a tough trading session on Tuesday. The stock dropped roughly 12%, closing at $2 even, a level that's both psychological and technical in nature. Now, there's a lot of noise out there. The reverse stock split vote took place on Monday, and as of this morning, we're still waiting on the official results. Nothing definitive has been filed yet, and while some traders might be feeling shaky due to the dip, others see this as a critical moment to reframe the narrative. Here's why: historic short positions on Opendoor Stock are still under pressure. Let's unpack all of this so you're ready for today's market open. First, the basics. Over the past month, Opendoor surged more than 300%, going from penny stock territory to a high that nearly touched $5. It's been one of the most talked about names in online investor forums, with sentiment ranging from pure speculation to grounded optimism about a business turnaround. And now, after several days of consolidation and a sharp dip, people are wondering, is this the end of the rally, or just a setup for the next leg? Let's talk about shorts. While the stock has pulled back, it's crucial to understand that many short sellers entered this trade when Opendoor was trading at or below $1.50. That means, even with Tuesday's dip, there are still a significant number of short positions sitting in the red. That creates a scenario where bulls aren't the only ones feeling pressure, shorts are too. The key thing to remember here is that a short squeeze doesn't need new highs to happen, it just needs enough upward momentum to cause discomfort among bearish positions. If Opendoor shows strength in the $2 to $2.40 range over the next few days, those short positions might be forced to unwind, especially if we see positive news flow or pre-earning sentiment shift. Let's also not forget what this stock has done before. Just last week, after dipping early in the session, it staged multiple afternoon rallies and closed higher several days in a row. This has become something of a pattern: early weakness, followed by late session strength. So if you're looking at a red pre-market candle this morning, don't panic just yet. Now let's zoom in on the shareholder vote. As of right now, no formal SEC filing has confirmed the outcome of Monday's special shareholder meeting. However, based on retail sentiment and board communication, many investors still believe the board will only enact a reverse stock split if absolutely necessary. That alone has calmed some nerves, but the lack of official news is understandably causing uncertainty. So here's the thing: if the reverse split is approved, it might allow the stock to stay compliant with Nasdaq's listing rules. But more importantly, it may open the door for certain institutional investors who require minimum share prices before taking a position. On the flip side, if the vote is rejected, it may actually reinforce the power of the retail crowd, showing confidence in the stock's ability to organically maintain or build price momentum. Either way, the split isn't the main story here. The real catalyst? Earnings. Opendoor's next earnings report, expected in August, is quickly becoming the event that matters most. We're talking about revenue growth, adjusted margins, operational updates, and potentially improved forward guidance. If the company shows even moderate improvement in its unit economics, the stock could catch fire again, especially as broader housing market data begins to trend in a more optimistic direction. Speaking of which, housing. We've seen some interesting signals recently. Mortgage rates have stabilized. Transaction volumes are creeping upward in key urban markets. Builder sentiment is improving. If this trend continues, Opendoor could benefit directly, not just from an improved selling environment, but from better margins on each transaction and a potential rebound in inventory flow. That's why there's still chatter about that bold $82 long-term price target floating around from some earlier bullish analyst projections. That figure isn't based on Reddit hype, it's based on Opendoor executing well in a more favorable real estate cycle, optimizing costs, improving user acquisition, and taking meaningful share in residential real estate transactions. Now, let's get tactical. What should you watch for today? 1. Pre-market volume. A spike here, either bullish or bearish, can signal what the broader market is thinking heading into the bell. 2. News flow. If the company files the vote results this morning or gives any further guidance, that could spark immediate movement. 3. Price action near $2. This level is now acting as a psychological anchor. If bulls can defend it and push the stock back into the $2.20 to $2.40 range, that would be a strong signal of resilience. Also, don't underestimate retail. Opendoor has remained one of the top trending tickers on StockTwits and Reddit's Our Wall Street Bets. That attention fuels liquidity and keeps sentiment alive, even through red days. So what's the play here? Patience. Bulls don't need the stock to explode today. What they need is consolidation and signs of support holding. If that happens, and especially if earnings buzz builds, we could be looking at a second wave of momentum heading into August. To wrap this up, Tuesday's decline doesn't cancel the rally. It resets it. It gives new buyers a chance to enter. And it keeps short sellers guessing. So as we head into the market open, keep your eyes on the charts, your ear to the chatter, and your focus on the catalysts that matter. Opendoor's story isn't finished. It's just getting more interesting. If you found this video helpful, hit that like button, subscribe for more daily updates, and let me know in the comments, are you still holding your shares? Are you buying the dip? Or are you waiting for confirmation before jumping back in? Thanks for watching, and good luck in the markets.